back for another update. We're going to be taking a look at the US stock market today. This is going to be a very quick video. We're not going to dive too heavy into the macro technicals. That's mostly reserved for the Discord, but what I wanted to show you here today, and the reason I'm making the video, is to show you that we do have bearish divergence on the daily time frame on the S&P 500. Okay. This is our bearish divergence where the price makes a higher high, but then a lower high on the RSI. So it wouldn't surprise me if we come down to fill this wick over here. I would say worst case scenario, we fill this, sorry, not wick, fill in this gap. And then we may also fill in this gap over here. This gap was kind of tagged on May 23rd, but we could still come down to it. Maybe even come down to backtest the 200-day moving average one more time, like this, and then bottom out and then continue up from there. Or we come right down to this worst case scenario. That would be really bad, really bearish, I should say. But yeah, let's not jump to conclusions yet and say that, okay, yeah, S&P's for sure gonna do that. I just wanted to simply point out that we have bearish divergence on the S&P, and then if you take a look at NQ, we also have bearish divergence. So this is your higher high, and then you have lower highs. So this is actually triple negative divergence, where you have 3 consecutive higher highs and 3 consecutive lower highs on the RSI. So it wouldn't surprise me if we come down to any of these fibs right here. Okay, so at least coming down to the 23.6 at 20,834. If you lose the 23.6, then we'll come down to the 38.2, maybe even backtest the 200-day moving average, just under the 23.6. But I could definitely be wrong, and NASDAQ opens up higher tomorrow and continues on higher to make a new all-time high. But just wanted to simply point this out. That was the reason for this video. We're going to take a look at the Russell 2000 over here. I'm bullish on the Russell 2000 on the macro. However, I must make it aware to you that we also have some bearish divergence here as well on the daily. Yeah, okay. Let's take a look here. So you see this RSI, it's making an equal high. I mean, it slightly went above this high, but I would consider this an equal high. And then we have a higher high on the price. Okay, so that's called Class C bearish divergence. It's not the strongest form of divergence, but it's still present nonetheless. And yeah, we may just come down to... Oh, and I also noticed that we didn't get above the 200-day moving average here. We weren't able to get above it. We actually rejected off of it. And then if we take a little bit of a closer look, yeah, we formed a topping tail on June 10th. June 11th, we took out the highs and then ended up closing below the low of June 10th. Then we had a doji the next day, a gap down. Yesterday was a topping tail. Yesterday was a topping tail, and then today we're reaching for the lows. We reached for the lows of June 13th, so we may come down here on the Russell 2000. Down toward any of these fibs over here. But we'd mainly be taking a look at this gap right here. You see this gap over here on April 22nd and April 23rd. So we may come down to fill that gap. Right? This may even be your ABC correction, where you have a 3 down in your A, 3 up in your B, and then you have a 5-wave move to the downside for your C wave, and then you continue up there for the rest of the run. Okay, but I just wanted to make this quick video just to show you the divergence on the indices. We can take a look at the Dow Jones very quickly as well, and the Dow Jones, same thing, right? Equal high but a slightly higher high, so that's class C bearish divergence. Okay, and we're actually today, the high of today, we back tested the 200-day moving average, so I'm expecting a move down below the lows of May 23rd. I hope you guys enjoyed the video. If you guys have any questions at all, please feel free to let me know. Peace out and take it easy. I'll see you guys in the next one.